So now it's January 2024. We're well into the new year, and you might be wondering if this is the year that you should hop into the Los Angeles real estate market. Well, stay tuned because in this video, my expert lender is going to teach you exactly what you need to know so that you can win in this LA market. Let's get into it. Hello, welcome back to the channel, Living in Los Angeles. Today I have some special guests. I'm here with Christina Briseno and I'm here with Sahara the Realtor. And we are going to give you your January real estate market update for Los Angeles. So welcome, guys.
Thank you. Thank you for having us.
Awesome, awesome. Yeah, I'm happy to be here. And yeah, so, we're here in January and the market has changed quite a bit. We've had a lot going on with interest rates, and that's why I wanted to bring my expert, Christina, on so she could tell us a little bit more about what's been going on.
Yeah. So, just we had a rough 2 years, right? But we got right through it. And coming into the beginning of the year, we saw, we put in the work, right? We just like planted those seeds and just kept going and going and going. And come the beginning of this year, I want to say like January 2nd, 3rd, the phone just started blowing up. Like the buyer just came out of the woodworks and we're ready to buy, we're ready to move forward. It was that trickling down just a little tiny bit on the interest rate. The needle moved a little bit, and then the clients are like, right, they've been ready, they've just been scared.
Got it.
You know what I mean?
So a lot of people were pretty much waiting on the sideline,
Right,
and now the interest rates have come down.
right.
They're jumping back in the market.
Exactly.
All right, that's really important for everybody out there to understand because that is what we're seeing. Yeah.
Then what we explained to our clients that like they want to keep waiting, they want to keep waiting until the rates drop. I said that's fine too. If you want to wait for that, just know that when those rates come down, the property's going to take another jump up.
Exactly.
So we're kind of just waiting to see. We're not seeing that the market come down.
Mm-hmm.
The rates will come down, which will help our clients qualify for a bit more, and we are seeing that.
Mm-hmm.
And we're able to offer closing costs, not too much yet, but
Mm-hmm.
I'm seeing where we can offer $5,000, to $4,000 or $5,000 in closing costs. Where
Okay, good.
last year there was no room, no cushion, no nothing.
It wasn't.
No, because those rates were like 7%. 8% was kind of the norm, and
Yeah.
and then you had the clients that said, "Well, I can refinance, right?" I'm like, perfect. You understand,
Yes.
right?
Yes.
Buy when the market's still kind of little still right now.
Mm-hmm.
But when that market changes, yes, you have a 7.5 interest rate. But in 6 months to a year, the market comes down. We can refinance you just a rate and term. Or at that point, if you have, equity and you want to do some repairs in your home or, pay off some debt, whatever the case may be, we can, there's options for them.
Absolutely,
Yeah, we can offer
absolutely.
those options.
Now, one of the things I love about Christina is that she's actually a mortgage broker, and so she has access to more than what a normal, what would you say, an institutional lender like Chase and Wells Fargo. Tell me about some of that and why that's an advantage for some of the clients out there.
Yeah, so we're pretty much the best of both worlds
Mhm.
because we are direct lenders. We fund our loans. We have our own product, and our rates are very competitive being on that side of it, right? But let's just say a client doesn't fit in that cookie cutter. They don't have the 7+ FICO score, doesn't fit in that box because the better the score, the better the interest rate. Depending on the scenario, the more down payment, all that takes into consideration. But we're also approved with over 140 brokers that if they don't fit into this box, we have another 140 that we can shop with, right? So we make it happen. It might not be the best scenario for you right now, but it's just to get your foot in the door, and we're gonna coach you, for the next 6 months, how to fix your credit, what you needs to be done, or if they're not ready right now,
Mm-hmm.
what can we do to prepare you to get there? You know
That's
what I mean?
important.
Because I feel like a lot of people get pushed to the side. We're like, oh no, you're not ready. Well, they don't even take the time to guide them. Hey, there's this credit repair company that I work with, and they can explain better than I can. I can do little things like pay off this credit card, and we're gonna do a rapid rescore where, they provide a new balance on their statement to get that FICO score reran, and FICO score went from 650 to 700, right?
Mhm.
But when we can't do that because the credit's just shot, and they're in a 500 credit score, 400, then they go to credit repair, 6 months to a year. But guess who they come back to?
You
They come back to you and the
Exactly.
realtor
Yeah.
because we took the time
to work
to
with
help
them.
them.
Yeah.
Exactly.
And I've seen you actually do this and it actually works. And I think
Mhm.
that's the beauty of it is that's why if you're interested in buying a home, go ahead and reach out because worst case scenario, she runs everything. And if you're not ready, she will get you ready. She'll put you on a program, get you with the credit repair. and come up with a solution for you so that, like you said, within 6 months to a year, you will be ready to pull the trigger. You can become a homeowner. So that's pretty awesome, actually.
And I think don't be afraid to, like, some people are like, well, my credit score is not good. Well, I don't know where I stand, or I'm not, well, how do you know?
Yeah.
Has your credit been run? They're like, no.
Mm-hmm.
But somebody said because I had a 640. I'm like, well, that's not bad. That's kind of mid, like, welcome FHA, right? You think right away, FHA.
Mm-hmm.
How much money do you have? About 25,000. Okay, great. You kind of like try and figure out the sales price, what type of buyer it is. And when we run the credit, do all that, they're like, oh, I do qualify for this. And, they're ready to move forward,
Right.
So a lot of clients right now, what we're seeing, or at least last year, like they were stuck on that 2020, 2021, 2.5%, 3% rate. And they're like stuck on that rate, right? And, when they hear the rate is 6% or 7%, right? I mean, now we're like in the fives. They're like, I don't want to lose my 3%, right? And I'm like, okay, but I've run the credit and did the whole scenario for them. And I have an example. My client she was probably close to her 70s. She had $80,000 in credit card debt with a 3% something interest rate, 3.625, something like that. But she was paying almost $2,000 a month in credit card debt. Well, on the refinance, her payment was going to go up $500. And she's like, oh my God. I'm like, but you're paying $1,500 more, right? Even if this doesn't go up. When I explained it to her that way, she was like, oh my God,
Yeah.
I didn't even realize that I can do that. So yes, her rate went up to a 6%. We paid off, I want to say maybe 15 credit cards.
Got it.
Right? Paid it all off. She cashed out some money for repairs in her home. With those repairs, her property value is going to go up. In 6 months, she's going to come back. We're going to refinance her and put her, whatever the market is at that point. So it's a win-win. So don't be afraid of that rate, right? You're stuck on that rate, but you're stuck with credit cards with a 29% interest rate that you're never going to pay off.
Never.
So you got to be able to coach your clients to that, or educate your clients to that, because they're just stuck on that rate. Well, that's great, but you got a big problem over here.
Exactly.
You know what I mean?
No, I do.
Yeah.
And this is why I really wanted to bring her on, because, as realtors, Sahara and my job is to go out and to find you the right home once you're pre-qualified. And a lot of people are scared to go through that process. And it really is the first step of buying a home, is talking to a lender, getting pre-approved. And I'm here to tell you, don't be afraid. Reach out to us, reach out to me. I will connect you with Christina. Let her run your scenario and let her tell you exactly what your situation is. Because what we find is that most people are ready when they think they're not.
Exactly.
Exactly.
So.
And
they're afraid, or they're afraid you might share their information, or it's all confidential.
It's all confidential.
It stayed here.
Absolutely.
And if you're not ready right now, okay, well, maybe in 6 months, you'll get a call. I'm not ready right now. Okay, well, let's take a look. Maybe you just think you're not ready right now, but you have to do the full evaluation. Some people are like, oh, I don't know if I want to provide this. I like to do the full pre-qualification. You pay stubs, tax returns, bank statements, source of funds, everything. Let's run the credit, because you can't just kind of halfway pre-qualify you. I like to give examples. Like, I had this other client, and he's like, well, the guy, over the phone told me that I didn't qualify. I said, well, did you provide any documentation? He said, no, just from what I told him. And I said, well, how much do you make? Do you have a cosigner? Well, I do, and I have my girlfriend. So, sometimes, like, a lot of people in our business, like realtors and lenders, they don't ask, the questions. Just kind of dig in there and ask a little bit more, because the client doesn't know that they can get a non-occupying cosigner who already owns a home, but they're just using their, income to help you qualify, or they don't necessarily have to live in the property, or an out-of-state cosigner. There's so many things that we're kind of like problem solvers.
Exactly. That's what you do. And that's what all of us, myself as a realtor, Sahara, Christina, we solve problems for you. A lot of times folks feel like they have to already do their research. They got to go out there, go on Google, and try to gather as much information as they can, when really you just need to make the phone call, because it's our job to figure out your solution and tell you how you can make it happen. So, just really want to reiterate, don't be afraid, reach out, let Christina go through your whole entire situation, let her come up with a plan for you. And then once you are ready, that's when we'll kick in and we will find you the perfect home for your budget and make it happen for you. Yeah, absolutely.
And I was talking to my processor this morning. She's like, "Oh my God!" She's like, these down payment assistance programs. They've been bombarding her with, with questions on those, and those are great too. I mean, I don't want to knock them, but remember, the government's not going to give you anything for free, right? So I always, the client that comes in, I never, shoot them down. No, we do have them. We offer every down payment assist, whether it's a city program, a government program, they're out there, and we, have access to them. But I always ask the question, do you have a 401k? Do you have a retirement account? Do you have, this or that, whatever? And they're like, I do. Well, how much can you pull out? I don't know. We'll find out, because that's your return of investment. Because most clients in the first 3 to 5 years are going to refinance. They're going to sell. They're going to cash out. They want to do something. Or the rates come down. Well, why are you going to stay at that rate? You're going to refinance at that moment, right? So I always say, you have to pay. Most of them. There are some grants out there. The problem with the grants is that the closing costs all have to cover. You know what I mean? Like the down payment and closing costs all have to be covered by that grant. So at the end of the day, sometimes you're just getting 1%, right? With the higher rate, maybe point and a half higher, because you're borrowing that money for your closing costs. Or, well, why don't we ask the seller for closing costs?
Exactly.
How about right now with the way the market's shifting a little bit, I can give you $5,000 and we ask the seller for another maybe $7,000 or $8,000 in closing costs to cover the most.
Yes, and sellers are saying yes to that in this market. They absolutely are.
They're flexible.
Yes,
They're definitely flexible. So I mean, there are a lot of great programs out there, but like I said, I mean, rate's gonna be higher. If you're okay with that, fine. They have the Dream for All program that everybody's raving about. Yes. They're going to lend you 20% down, not give you, lend you 20% down. You have to pay back that 20%. Plus, I want to say it's, the last time it was 5% of whatever equity you had to pay that back as well. And I'm sure with interest as well.
Yeah. There's a lot of strings attached to that dream.
Yes.
Yeah,
absolutely. Fan of it if you have your own money, but then there's people that will never come up with 20% down. It's just not going to happen, and that's great.
Yes.
But that client has to be fully qualified, ready to go, registered, done their home education, because boom, it's gonna go like super quickly.
Exactly.
I think they rolled it out on, I don't know, maybe like let's just say like on a Wednesday, and it was gone by that Friday.
Exactly. That's what happened last year, right? Yeah. So to all you guys out there that might be excited because you're hearing all this news about the Dream program, don't let that discourage you, because trust me, within a week or two, you're going to hear the same thing that happened last year. It's gone.
Yeah.
And don't let that discourage you from becoming a homeowner. Reach out.
Yeah, we have other programs.
We have a ton of other programs that are actually way better.
Exactly.
So,
yeah. And we do like the FHA 3.5% down. We can do as a first-time buyer, conventional as low as 3% down. Then it goes to 5, 10, 15.
Yes.
We have banks for the mortgage insurance. The higher your credit score, the better that mortgage insurance is. I've had deals where it's a 900 sales price, $1 million sales price, and they're paying like $26 for MI. With when them not coming in with 20% down, because they have a close to 800 credit score. So there's so many options that we have. It's just what box do you fit in?
Exactly.
You know what I mean?
And in order to determine that, you got to reach out.
Exactly. Yeah. Yeah.
So this is why I wanted to have her on, and so all of us here, you can see the team, we are prepared for you. So when you reach out, like I said, I'll connect you with Christina. She'll take you through her process. If you're ready to go, then that's when myself and Sahara will step in to help you find the perfect home for you. And if for some reason you're not ready, don't worry about it, because she will put you on a plan and help you get ready. And then that's when we'll step in and we'll make your dream of becoming a homeowner happen for you. So Awesome. Well, thank you so much. I appreciate you taking your time today, answering some questions for the audience out here. If you guys have any questions, please feel free to leave them in the comments below, or just reach out. All of my contact information is below. Myself, Sahara's contact information is below, and I'll also make sure I have all of Christina's information in the description below.
And I just want to share one more thing.
Absolutely.
People, they just, after 2020, everything's remote. And so I would say like 95%, maybe 97% of the pre-qualifications are done online. Where it makes it easy. I have a link in my email where they can just apply there, upload all their documents in a secure website, and I want to say like 90% of that is done. I am starting to see where people want to come in and meet you, which is good, because you build that rapport with the client, and okay, you're normal.
Yes, exactly. We're real people.
Yeah, and so just then they refer you somebody else, and somebody, you know what I mean. So either whatever works for them, we're super flexible with that. So,
awesome. Yep. So we got options. Excellent. Awesome, guys. Well, thank you so much, and I will see you guys in the next video. Bye bye.
Thank you.